Hi, and thank you for joining us today. This is a re-record of our private lending webinar that was done earlier today due to some technical difficulties. There will be no Q&A as we had on the webinar that was hosted live today, so we do apologize for that. But with that said, let's get right into it. We're going to be covering the basics of private lending with an IRA, so essentially how to lend with an IRA, what your options are as far as the types of accounts to use, some different structures with lending, and a good 30,000-foot view of just how it all works. My name is Alex Perny. I've been with Advanta IRA since 2012. I've had a hand in over 1,200 individual investments with various client accounts and structures, many of them involving some type of debt or lending with IRAs. So hopefully I can bring some of my expertise to you today and get you a good baseline of if you are interested in pursuing a lending structure with your IRA of just how that would work. A quick disclaimer, Advanta IRA and our employees do not provide investment advice, nor do we endorse or promote any investment products. All informational materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. At Advanta IRA, we are a self-directed retirement plan administrator servicing clients nationwide. We provide our clients with exceptional service experience and knowledge that is paramount in administrating self-directed IRAs. A little bit about Advanta IRA, if you're unfamiliar with us, we have almost 20 years of self-directed IRA administrator experience. We're comprised of attorneys, CPAs, certified IRA services professionals, and certified IRA professionals. We hold any and all cash deposits from our client accounts in fully FDIC insured institutions. So any type of returns that you're seeing or loan payments that are coming back into your IRA are afforded all the traditional suite of protections that you'd be used to from any normal banking relationship. We're proud to say that we have over $2.1 billion of assets under administration, and every single client that comes and opens an account here at Advanta IRA has a dedicated account manager. So if you open up an IRA with us, you will have a single point of contact that will handle any and all questions that you may have and process any investments that you have as well. So we really aim to have a very concierge level service for all levels of accounts, not just high valued ones. Anyone from $1,000 contribution account to $1 million account gets the same great level of concierge service with us at Advanta IRA. A lot of people might be a little confused when it comes to looking at this for the first time of why they've never heard of self-directed IRAs, or maybe confused that thinking that this is only some type of new type of investment structure that the IRS might come in and say, hey, wait, you can't do this anymore, which couldn't be farther from the truth. The IRS does not micromanage IRA regulations, and really they put it up to the administrator of the IRA account to determine what types of allowable investments they will hold within that IRA. So with that said, the IRS just kind of gives a general guideline of what they won't allow, and then the IRA administrator are the people that are going to determine exactly what they're going to hold. So really only about 4% of total self-directed or total accounts that are IRAs or retirement plans are truly self-directed. Now, understanding what kind of plan you can use for doing this type of investing, so lending out of an IRA, is not just simply going to be funneled into traditional or Roth IRAs. You can utilize many different types of an account. So traditional IRAs are going to probably be the most common type because they can accept in rollovers from other retirement plans or other pre-tax retirement plans. So if you have an old 401k or a 457 or a thrift savings plan, you can roll those funds directly into a traditional IRA. Conversely, I've heard quite often that people think that you have to have a Roth IRA in order to do some of these investments. That really, again, couldn't be farther from the truth. Any of the types of plans that I've listed up here on the screen in front of you can be used to self-direct and provide loans to people out of the plan as the investment structure. Now, if you're a self-employed individual or you run a small business, you might want to take a look at SEP IRAs, simple IRAs, or individual 401k plans, as these allow you to contribute a portion of your earnings, revenue, or compensation to these plans, creating a large tax deduction, or potentially in some cases an after-tax contribution to these plans that will allow you to plug away much more money on an annual basis. And keep in mind that any returns that you make to any of these types of an account from the loans that you potentially make are always going to be tax exempt. So you're not going to have to pay any taxes on those at the time of receipt, no matter whether it's Roth or traditional. All of this is going to be tax deferred. So you're not going to have to file a tax return. It's not going to go on your personal income statement. And it's great to know that you can also use things like health savings accounts and education savings accounts to this effect with alternative investing and lending out of these types of plans. Really great tools to understand that you're not just limited to traditional and Roth IRAs. There are a lot of options out there for you. So what is a self-directed IRA? Well, as I mentioned earlier, a self-directed IRA really is just a retirement plan administered by a custodian that will allow for alternative investments to securities trading. Here at Advanta IRA, we allow for basically anything that's not a publicly traded security. So these alternative assets, obviously a focus on mortgages and notes today, can include things like real estate directly. You can do private placements, so investing in private companies, limited partnerships, trusts, LLCs. You can buy precious metals. You can invest in foreign currency exchanges, futures trading, and much, much more. So if lending is what kind of got you in the door to looking at this today, great. If you want some other options, you're not just limited to lending, even though that will be the focus of what we're going to be covering here in a moment. So what kind of options do you have with lending? Well, again, what I'm trying to do is clear up misconceptions that people might have regarding the types of assets that you can have within an IRA. Now, most people think, oh, well, I lend someone money and then I have security against that loan, mainly being a mortgage and typically being real estate. But you can hold security to a loan in many different forms or fashions. A lot of people that come to us do that. They lend someone money and secure it with a recorded mortgage against a piece of real estate. This is a great way to have a good amount of security when you lend someone money out, guaranteeing that they pay. And if they don't, then you get to foreclose on the property and have your account be made whole by the real estate that secured the note. Now, again, that's not the only way to go about it, and there's many different forms and flavors of doing mortgages. You could do something like equity participation, where instead of getting a fixed principal and interest payment every month or quarter, you get to take advantage of the profits when a property sells, and instead of having a stated interest rate, you would just then in turn be receiving a portion of the profits on the sale of the property. A great way to try to bolster some higher returns and actually get your IRA loan exposed to some of the upside equity and the appreciable value increase in the sale of that property, instead of just getting back your principal and interest along with the remaining outstanding balance of the loan if the property sold. You also don't have to have a recorded security against for the IRA loan to happen. You can lend someone money without any type of collateral. This is called unsecured lending. Now, granted, this is going to be probably a significantly riskier proposition for most people, as in the event of default, your IRA would have to sue someone in court to try to recover that debt. Now, if they're not paying your IRA, the likelihood that they're not paying anyone else is probably pretty high because they probably don't have money. But just be aware that that is a way that you can go if you wanted to issue someone or a business a personal loan or unsecured loan. You can definitely do that. Now, one of the benefits of doing that is that with the higher risk comes a potential for higher reward. You have the ability to charge higher interest rates for that. But one thing that you do need to understand is that there's a thing called usury, which is the total amount of interest that you can charge on a note in a given state. All states are different. So there's 50 different flavors of usury law in the United States. So what you need to do, especially if you want to lend someone money and you want to make sure that you're maximizing your return, is check what the state's usury laws are. Maybe even talking to an attorney that's familiar with that, so that way you don't violate any local laws of where you're doing the loan. So again, different states have different stated amounts that you can charge for the actual interest on a note. And sometimes that's compounded total with, like if you did equity participation, of how much you receive, of being a ratio of what the outstanding loan is and that percentage. Some states don't. Again, need to check locally to see what those are. And you can also secure loans with other things. We've seen people use the Uniform Commercial Code lien filing system to secure their loans with things like rolling equipment or heavy equipment or cars or artwork and things like that. Now, you do have to be careful when you do secure something, do use security other than real estate to a loan that your IRA makes, because there are certain assets that the IRA cannot hold, and we'll get into those in a moment. But just understand that also the feasibility from an operational standpoint of an IRA holding an asset with some of the other rules could be very hard, such as if you secured an IRA note with a, let's say, a fleet of trucks that maybe a business had. Well, the IRA can't really functionally own those vehicles. You can't drive them, you can't store them on your personal property. So foreclosing on something like that could be tough. And also securing the loan with something like a mobile home. Mobile homes typically are always registered through Department of Motor Vehicles, so having an IRA asset that has to have security registered like a vessel or a vehicle registration can cause some other issues. Not to say it can't be done. We definitely have people that lend to people that want to purchase mobile homes and buy or sell, fix or rent mobile homes, but just be aware that having that good dialogue with us here at Advanta about what you want to do is very important to us being able to properly help you down the road of making a successful loan happen with your IRA. Now, one of the biggest benefits of doing IRA investing, especially self-directed, is that you get to use your network of people that you know and trust to help you invest. Now, we've all seen this past few weeks how tumultuous the US stock markets have been. Most people just kind of get their information on the news, or maybe even trying to do more research. It's hard to really kind of get a good purchase on what these type of markets will do, and people are constantly surprised by it. However, the ability for you to use information that you know from people that you know and trust to make informed decisions is brought to the forefront when using self-directed IRAs, because you can lend to someone that you've known for 30 years or someone that you've personally invested with on, let's say, real estate projects, and you know and trust them to be a good steward of your IRA funds to repay and also help you make a profit on the deal as well. So being able to use your network to help bolster your returns, to help secure your retirement assets, is a huge benefit of doing this. And again, you can use any type of retirement plan that you have to invest in this very local and very profitable sector of investing with people that you know and trust. Now, one of the first things that we need to kind of get out of the way of understanding the basics to this is how to get money over into an IRA that you can do this kind of investing for. Because a lot of people that come to us are typically under the impression when they talk to a broker at, let's say, like a Fidelity or a TD Ameritrade, that, and really by no fault of maybe that broker, that person, that company, when they ask if they can do, let's say, a mortgage loan on their IRA, or if they can buy real estate, they're told, and erroneously, that no, the only way to do that is for you to take a distribution, which would be taxable and potentially have penalties to you personally, because they don't administer those kind of assets. The biggest thing that you can do to help put yourself in a good position is talking to someone like us here at Advanta, and we can walk you through the process of how to properly move funds from one of those types of IRAs, or an IRA administered by a custodian or a broker like that, to one here that we administer, because there's a proper process to do that via transfer or rollover, which will allow you to not have to do any tax reporting and also not pay any taxes or penalties on it, because the IRA funds are moving from one IRA directly into another. You're not directly touching these funds. And again, you're not having to pay taxes and penalties, and being able to keep it under the tax sheltered auspice of an IRA is incredibly important to be able to do this with an IRA. So the biggest thing I can tell you is that give us a call and let us walk you through that process of rolling over funds into an IRA properly without having first taken a distribution. Now, there is definitely some self-directed IRA rules we need to be aware of. Some things called prohibited transactions, prohibited individuals, and then some instances where the IRA might have a tax return to file. So prohibited investments. The IRA cannot directly purchase a life insurance policy. It also can't directly own collectibles, antiques, rare bottles of wine, artwork, stamps, rare coins. You are allowed to purchase precious metals, and you can purchase things like American Golden Eagles, gold buffaloes, pretty much any governmental issued gold bullion coin, and not just necessarily from the US. You can buy other minted coins from like the government of Mexico, Canada, Australia, places like that. But one thing to understand, and I alluded to this earlier, is that you can secure a loan with things other than real estate, and you can secure a loan with things that are not allowed for the IRA to hold. I've seen clients have the security on a loan be rare paintings. However, what you need to understand if you do something like that is that you cannot necessarily take possession in the IRA of that type of asset if you had to foreclose or if you had to take back the security if there was non-payment. So what do you do in that situation? Well, I've seen clients write some type of direct sale clause in the note that the underlying security would be immediately sold in cash deposited to the account, so the IRA wouldn't really be taking possession of those types of assets. But understanding that if you're going to go kind of off the beaten path of using real estate or something like that to secure a loan, that there might be some issues when it comes to actually foreclosing on that type of asset. Now, prohibited transactions, there are certain people you can't lend money to or purchase or buy from, and we'll get into that on the next slide. So the people that you cannot directly lend to or borrow from are listed right here. It is basically, if you look at your family tree, anyone directly up and down from you in that family tree is disqualified from you being able to lend money to or borrow money from. So you can't directly deal with yourself or your spouse, parents, grandparents, children, or anyone, again, directly up and down from your family tree, or a business entity owner controlled by any of the above. However, there are some caveats to this. You can partner with people. So let's say you and your spouse both have IRAs, or let's say you, your spouse, and yourselves personally want to all partner together on a new loan where each and all three of you, or two of you, or whatever it happens to be, want to use IRA funds. Well, you can do that new partnership loan together, and we'll show how a partnership works here in one of the case studies. But if you are dealing with maybe smaller dollar figure IRAs, or even if you have bigger IRAs and you want to get in a bigger loan, you can partner those together. You can list everyone and their percentages, or I should say their IRAs and their percentages on the actual note agreement. So the mortgage, the note, and everything would list all the IRAs as to their percentage of divided interest on that, and you could go forward from there. So remember, you can't sit across from someone that's disqualified and lend them money, but you can come together on the same side of the table and invest with them as a partner, just can't directly lend or borrow money from any of these disqualified individuals. So what do prohibited transactions look like? Well, here's a few listed up here for you to look at. If your IRA lends money to a property and you will lends money on a property you will occupy, can't do that. So even if you lend it to a third party and they secured that IRA, they secured that loan with a particular property, you could never utilize that property that secured the loan. You can't lend money to yourself. However, there are certain aspects with 401ks where you can actually borrow against it, called a participant loan. Again, that's a real specific use case, but from an IRA perspective, you can't lend yourself money. If your father's IRA lends money to your son, again, even though that skipped you in the family tree, that is a prohibited transaction. You lend money on a project that you will receive a personal benefit from. Let's say you signed a master lease on a property, but you lent the money to the purchaser of that property and they secured it with that property. You couldn't sign that master lease agreement and receive benefit from that property if your IRA holds a secured interest in it. Your IRA makes a down payment on a property and you personally guarantee the mortgage. A little bit outside the scope of what we're talking about with the investment structure of the IRA actually lending someone money, but important to understand nonetheless. If the IRA loans money and the note is secured or by a property owned by a disqualified individual, again, you lend someone money. In this case, let's say it was your son and the son owned the property or took title to the property, even if it wasn't an LLC or a trust that they owned, couldn't do that type of scenario. Now, types of real estate that you can use for the security on it. There's not kind of one prescribed type of property that you have to look at. It can really be almost any type of real estate, and even some things out of real estate that you can use if you want to have that type of security collateralize the loan. So if you lend someone money, they can go out and purchase a property or issue a mortgage and secure it with another property, but that property can be used for anything like long-term rentals, short-term rentals, it can be a rehab, fix and flip. You can lend someone money and the mortgage can be written on a condo or an apartment. They can buy mobile homes and parks with the money and secure it that way. I've seen people offer collateral of things that are not real estate related, such as maybe tranches of tax deeds, the interest in a real estate investment trust, even beneficial interest or limited partner interest in syndications or private placements. You need to be careful when it comes to private securities, though, if they're issuing that as the security on a loan, because sometimes those are restricted securities and ownership changes are prohibited in the subscription or private placement memorandum for those particular types of assets. So just be careful if you're dealing with non-real estate related security, as some of the rules can extend out a little bit farther when it comes to maybe needing to foreclose on that in the event of non-payment. So when it comes to lending on real estate, some important things to understand is that the lender is the name of the IRA. So it's not going to be you personally. It's going to be in the name of the IRA. So if you look at the note and the mortgage, the lender and the grantor would be listed as Advanta IRA for benefit of John Smith IRA number 1234. So it's in the name of the IRA by virtue of the custodian. All of the funds from the loan for the loan come from the IRA unless you have a partner, in which case it would come equally or in the proper proportions from the different partners, IRAs, or could be taxable individuals as well. The loans can be made with partners, including yourself and others. All of the loan income, if the IRA is the sole lender on the note, is coming back into the IRA tax-free. That's principal, interest. There's equity participation in the sale of the property. All of that comes back into the IRA tax-free. So if you make a loan, remember, none of this is going to be calculated on your personal income statement. It is actually a very simplified procedure for you to do this. Everything comes back to the IRA tax-free when you have any type of return. So all those monthly payments, any payoffs, anything like that comes back to the IRA tax-free. And one of the cool things is that you get to determine all the details of the note and exactly what goes into that. You don't necessarily have to get approval from Advanta for that. So you determine things like the interest rate, what the return on, essentially you get to determine what your rate of return is going to be. You get to determine and work with the borrower as to how long the term of the note is. You don't necessarily have to do something like a 30-year mortgage. You could do a 5-year with a balloon. You could do an adjustable rate mortgage. You could do, again, an unsecured loan that's over 30, 40, 50 years. It's really interesting to see what people come up with and work well for the not only the borrower to have a good deal and also the IRA to be able to make a good return. You can get creative with this. You get to determine the payment schedule. You can have monthly payments, bi-weekly, annual payments, quarterly payments, whatever you want. You as the client get to determine exactly how this investment is going to run for your IRA and exactly at what rate you're going to be making money back on this particular investment. Now, when it comes to any type of investment structure, you need to understand where some of the pain points can come, and managing the note and the payments is something very important for people to understand. The IRA owner is responsible for tracking all payments. We at Advanta don't necessarily notify you of non-payment in a traditional sense. If there is a payment made to your IRA, then you will be notified with an automatic email notification that a payment's been received. However, a few things to understand about that. We don't necessarily notify you of non-payment. If you don't receive a notification from us, it means we haven't gotten the payment. So a lack of notification is essentially a notification to you. However, one thing to understand is that we don't track necessarily when a check is received by Advanta. Let's say the mail comes in late on a Friday and it's a holiday weekend, like we just had the Dr. King holiday weekend the other week. The check might sit and not get deposited until Tuesday, even though it was received on a Friday. So understanding that you kind of need to have a little bit of either planning if you don't have as much rapport or trust with the person you lent money to, or possibly even using a third-party loan servicer to service the loan it might be beneficial to you. Now, you don't necessarily have to use a third-party loan servicer. One thing that some clients do is they will have the mortgage payment made out to the IRA but mailed to them personally, so that way they know that the borrower is paid on time, and then they just forward that check that's made payable to the IRA to us for deposit. And if you do have to unfortunately go through a foreclosure or file any type of legal action against a borrower that your IRA has lent money to, any and all expenses related to a foreclosure have to be paid from IRA funds. So if you're maybe not as comfortable with the person you're lending to, or you feel that there's a higher degree of risk, making sure that you have enough reserve funds for a possible legal action is very important as well. So the first case study on lending on a real estate deal, a piece of rental real estate. John wants to use some of his 401k from a previous employer to finance a rental property down the street from his house. So he had someone come up to him, and there's a property down the road that this person wants to buy. So he found the borrower that needed money for the purchase, and he and the borrower worked through all the details of what exactly was going to go into the note, how long it was going to take to repay. He submits any and all purchase authorization forms to us, and he read and approves all of the loan documents, because again, he is making sure that all of the documentation at least meets his criteria for the actual terms of the note. So he needs to make sure that, you know, things like interest rate, term, maturity date, all those things are correct, because we will just review it for making sure that the IRA is properly titled and that the interest rates and things like that match what is placed on our forms. So we work with the closing agents to ensure proper titling on all loan documents. We wire the funds to closing. We hold the recorded mortgage and copies of all documents like the original promissory note, the lender's policy of title insurance, the recorded mortgage. Everything is held directly by us here at Advanta in safekeeping, and then we receive all of the income. So any principal and interest payments come directly back to Advanta as well. So what's the actual deal look like? Well, the borrower pays $1,200 a month for 2 years. That $28,000 representing both principal and interest is deposited directly back to John's IRA with no taxes due on any of the gains that are made from that over 2 years. The borrower sells the property in 2 years. So then at that point, after 2 years, John has received the $28,000 already, and then he receives a payoff for the outstanding balance of principal and any accrued interest by the closing date, and no taxes are owed by the IRA. But this also illustrates something. Well, let's say John in this scenario had intended, had the note actually written for 15 years. In this case, he would have missed out on 13 years worth of interest on that money. So what some people do, and again, this is for you and the borrower to determine, is maybe write a prepayment penalty or an early a penalty that the borrower has to pay if the loan is paid off before a certain number of years, to help try to make sure that, you just didn't lend out money and make, nothing on that money for the amount of time it was tied up, compared to what you might make if the loan had gone to term. So again, just goes to illustrate that there really is no limit as to kind of the interesting things that you can write into these loans to make sure that it's a good deal for you and also a good deal for the borrower as well. Now, partnering on a loan is something that is also important to understand as well. So in this case, Linda and Paul would like to partner their IRA funds to finance some real estate. They don't want to deal with tenants and toilets. They just like to finance a deal. So they each have 100 grand in their IRA, and they find a borrower who needs 150 for the purchase of a flip property. They estimate their IRAs receive $1,500 a month in loan payments that will go into their accounts. So they negotiate the terms of the loan. Again, they need to open their accounts. They're responsible for finding that borrower, submitting all the forms to us, and then also reading, approving all loan documents. Then here at Advanta, we have to work with the closing agent to insert proper titling on all of those documents. We wire the $150,000 to the actual title company or the closing agent, whoever is handling that deal. And then we receive and store copies of all the completed closing documents and any original documentation as well as depositing any future loan payments. So some other considerations on this. Remember, this was a partner deal between Paul and Linda. So the note in this case would list their percentages of interest on the note. So it's easy enough to see that in this case, each of them are contributing 75 grand from their IRAs, because both of them only had 100,000 and it was a $150,000 loan that they were trying to make. So they just split it 50-50. But this can be done in any percentage that you want. It can be 70-30. It can be 25-75. It can be 10-90. It doesn't necessarily matter. You have to draw those percentages along the amount of money that each of them is adding into the deal from their IRA. So again, the percentage is based on the amount of contributed from each IRA, no more or no less. And in this case, each IRA will share equally in the loan payments. Remember, percentages cannot be changed. So that pretty much wraps it up. If you have any other questions, always feel free to reach out to us. We host weekly events. We catalog all of our webinars on our video library. We maintain an up-to-date blog. If you're interested in getting started, it is as easy as pretty much about a 15-minute process of filling out an application, working with one of our sales associates to get everything set up, getting assigned to your account manager, and then just telling us what you want to invest in and letting us help you to structure those things within your IRA. If you have any questions, feel free to reach out to me directly. Again, my name is Alex Perny. You can reach me at 727-754-9954 or at Perny, that's A, P as in Paul, ERNY at advantaira.com.